All right, guys, so it's time I come clean with my best performing stock this year. And no, it's not Meta either. It's not Tesla. It's not any of the stocks that you're thinking about because we rarely, if ever, talk about it on this channel. And since the stock is kind of just getting started, does it have 10x potential from here? But that's not all. There's actually another stock that I get asked about all the time. I've been asked about it probably for the past 2 or 3 years now or so. And it has just completely gotten wrecked over the past year. I mean, like 95% beatdown kind of wrecked. So let's discuss if this is another massive opportunity for basically a 10x or even a 20x stock, or if it's all just complete fool's gold. So a lot to get into today, but make sure you like the video if you like me talking about a lot of stocks like these that we don't normally talk about as much. Hitting that like video lets me know, yeah, we want to see more of that, Luke. So let's start with the stock that I've been asked a ton about since basically the EV boom days. Back in the glory days of 2021, when anything EV related was just going to the moon, I've consistently been asked about this stock, and I've pretty much consistently given the same exact take. But of course, now everything in EV land is completely cratered. Even the cream de la creme, even Tesla has come down a ton from those dizzying highs that we got during that kind of EV peak. So the question kind of becomes, is there an opportunity here with this stock or not? And I'll kind of give you guys my full take on this entire stock, the reason why, and everything else. And that stock would be Plug Power. And guys, my opinion on this stock has not changed since 2021. Just because the stock gets caught up in the hype cycle, it means nothing to me. It comes down to fundamentally, what are the companies doing? What are they providing? What are their growth rates? What are their trajectories? How are they performing as a company? Are they moving closer to profitability? What is their EPS looking like? All those other, or can they scale? Obviously we see some that didn't even get out of the barn, right? They just basically had an idea and they never actually produced anything. All those sort of factors all come into these plays and come into my answer to those questions. So let's kind of break down Plug Power one by one and kind of see, is there an opportunity there or not? So for me, I wanted nothing to do with the company back then. And that was simply because they just, one, weren't performing, and two, the margins and some of the other growth trajectories and some of the other growth rates and such that everybody was attaching to it, I didn't like. I didn't think they were that good. I thought there was a lot better places to put my money at that point in time. And unfortunately, it has proven out repeatedly that Plug Power is just not a good company at all. Basically, since 2021, when we had that huge cycle, that huge hype cycle, they've essentially gotten less and less profitable. They're going in the opposite direction, guys. So when you're looking at a company, especially growth companies, right? One of the first things we all kind of focus on is, revenue growth. Are they growing revenue? How much are they growing it quarter over quarter, year over year? What's the CAGR? All these other things like that we all kind of focus on. The reality is growth in terms of revenue without, simultaneously getting more and more profitable is a terrible business model. Basically, in Plug's case, the more that they sell, the more their revenue goes up, the actually less profitable they get. And guys, this wasn't a one-time anomaly. This wasn't one of those, oh, hey, they had a one-time charge or a hiccup or something like that kind of, created a scenario where you kind of see that on an earnings report. No, this has happened consistently since 2021, where they managed to actually increase revenue, every year over year, they're increasing revenue, sometimes at a pretty good clip, but then they're also getting less and less profitable as the years tick on. And no matter how you slice it, no matter what you do, that's a terrible business model. How are you supposed to make money? I mean, you're going the opposite direction. Basically, the more you sell, the easier it should make, the better your margins should get, the more you should be able to pull out profits out of that money. And you're seeing the exact opposite happen, which means there's not only, obviously there's not a problem in terms of growing the business, there's a fundamental flaw with the actual business plan, with the business itself. It is fundamentally flawed, and not just a little bit, a lot. Like, I don't know you, but whenever I start a business and I go to make it grow, I want to eventually make it to where, yeah, maybe we lose money at the beginning as we're growing and we're trying to build things out and we're, building out infrastructure and everything else like that. But at some point in time, there's a plan for that to start going the opposite direction to where now as revenue increases, because we spent all that money building out, that profitability gets better and better and better and better to where we're making money. And obviously, the more we can grow revenue, the more money we can make. That's kind of business 101. And unfortunately, Plug Power is going in the exact opposite direction. And it's not the only stock, guys. There are tons of stocks out there that are exactly like this. They're just eternal cash burners, and they're always going to be cash burners. And that's a bad business. That's one that I never, ever, ever want to invest in. Basically, I think they only have a quarters of two worth of cash left before, guess what? They're going to have to dilute shareholders once again in order to raise capital, in order to keep this business open, if they can even raise capital to keep this business open. I have no idea at this stage, but I just know that is a terrible, terrible business model. And this is where the danger in the stock market comes. And I see a lot of people making mistakes because they get excited because they saw the all-time high, for Plug Power way up here, and now it's 95% off. And again, stock price up there is what gave you a false sense that it's a great company. And now stock price being cheap all of a sudden gives you a false sense that, well, it's got to go at least halfway up to that, right? At least a quarter of the way up at its current price. I'm going to make a lot of money. It's a 5x stock if it just goes a quarter of the way up. So why shouldn't I buy it? And guys, the stock price means absolutely nothing. That just tells you where traders are moving the stock at a given time. It's the performance underneath that actually matters in the long run. And that's how you keep yourself out of trouble, is by paying attention to what the fundamentals of the company are, regardless of the share price. That's why I preach valuation so much, because valuation is what keeps me from buying a hype run like that. But then it's also one of those things that keeps me from buying a 95% off stock that's complete trash as well. Yeah, we saw last year there was some great stock. I don't know if there was a great stock that got like 90% off, but we definitely saw some mega cap incredible companies go 70% off, 75% off. Shoot, you saw Palantir. That one got down well under 75%. I'm not sure how low it actually got whenever it hit its lows. But the point being, it is possible that great stocks get beaten down that far, but it's the fundamentals underneath that matter. I don't care about the share price. Give it to me 95% off, 99% off. It doesn't freaking matter. A bad company is a bad company. We saw examples all year last year with that. We saw some examples this year, some companies that finally went under that were retail favorites that were in that same exact scenario. And I would get asked constantly, hey, are you going to buy more? It's 95% off. It's 99% off. Come on, it's got to go back up. Guys, no, it doesn't. A bankrupt company and a bad business model is a bad business model. And right now, there is nothing about this stock that tells me anything other than bad business model. Stay away, stay far away. Again, I was staying away in 2021, and obviously looking at the financials and everything, like I just did before I put out this video, nothing there tells me there's anything there worth saving, at least at this point in time. I mean, maybe a miracle happens, but at that stage, you're just gambling. And I don't know why this is picking up steam again. I don't know. Maybe it's a Wall Street, but I have no idea, guys. I don't go searching out for reasons why some of these stocks get asked about a lot. I just assume, hey, somebody's making a video about it. There's a post on wherever. And that's kind of where this sort of stuff starts. But when I looked at this company, that's exactly what I see. So on to my best performer from this year. So let's kind of go from one extreme way over here to the other. And this stock is up over 230% just this year, just year to date. And since my last buy in the stock, it is up over 300% and right around a year. So in just a year's time, it's up over 300% from my buys. And again, congrats to you guys out there that were buying at the same exact time. Congrats to all our group members who were all over this play. I mean, you guys were all over tons of plays during that time. It was basically like shooting fish in a barrel. It was so easy at that stage. But all you had to do was just ignore the fear and, basically do exactly what we always do, is look at valuation, look at the company, and then execute on, hey, is it undervalued or not? Or is it stupid undervalued or not? And we basically executed buys there. So congrats to everybody that did that. And the stock I'm talking about is DraftKings. And so next, let's kind of look at, does the stock have a 10x type potential in it moving forward here? Because it's had a great run. A 300% run plus is an incredible move in the stock, especially for a stock like this. So we got to look at, hey, is there 10x potential or not? And kind of the first things you're going to notice is it's the exact opposite of Plug Power. Basically, since that hype run of 2021, which I admit it was way overvalued. I wanted no part of it there too because the valuation was so high. But unlike Plug Power, each consecutive quarter after that, they've gotten closer and closer and closer to profitability. They managed to move the needle the other way. Now, back then, I think their cash burn was too high, but I can't really argue with the strategy either because it's clearly working. They're growing revenues massively, and simultaneously, they're getting closer and closer to profitability. So the strategy that they're employing clearly is working, even though I thought personally they were burning a bit too much cash on a lot of their advertising and a lot of other things like that. That obviously is coming to fruition here in the future, and they're kind of becoming the dominant name in online betting. But there is something that absolutely concerns me with this stock, and you have to understand it too if you're looking to invest in this stock. Now, despite the fact they say they're going to be profitable next year, and I'm not going to argue with that or say management's wrong or anything else like that. That's kind of what they're projecting out. Right now, they are not profitable, and they've had an incredible run so far. And non-profitable companies that's had this big of a run this quickly, it is setting itself up for a lot of volatility, a lot of up and down, which you've seen in the stock price over the past year or so, or not the past year, the past 2 years or so, you've seen a lot of volatility in the stock price there. And so I suspect we're going to see a lot more as the market kind of tries to figure out, what should we value the stock at? Is management going to hit the targets they're putting out there? And what are the actual growth projections that we can accurately project to going forward? Because there's so much regulation and legalization, a lot of other things like that around DraftKings, kind of like some other plays as well. It's not as clear cut as just something that can be sold everywhere all the time. It's a little bit more nuanced than that. But with more states in the US needing money, guys, it's not just the federal government that needs money. There's a lot of broke states out there in the US that need more revenue coming in. Legalizing gambling is one of the easiest ways to increase that revenue coming into the state. So I suspect we see more and more states coming around to at least allowing online gambling in their states, and they start to see more and more of those barriers come away to allow them to grow further into the different markets that they're not able to get into right now. So although I'm not really super stoked about the valuation right now, because I will say it's trading a little bit rich, unfortunately, that's part of the journey with stocks like this, especially when we're right in the middle of a big rally, is, hey, they're going to get an artificial boost. And sometimes it's going to be kind of a ridiculous boost, and you're going to end up in that overvalued territory. But when you have a company that's growing as fast as they are, it is possible that they're able to grow enough and obviously bring that EPS down to where that next quarter, they look a lot better if they're really able to outperform. And as long as the stock price doesn't get too wild out of control. But right now, I would definitely say it's a little bit overvalued. But I think that's part of these plays. You're not buying this stock to, buy it right now and hopefully make 20% in a year and, some things like that. This isn't really that type stock. You're buying the stock right now to hold it and see what it does 5 years from now. And that's kind of where my head is. I don't care about the price right now. To me, the price right now relative to 5 years from now is probably honestly pretty cheap. But if I'm trying to view it valuation in the moment, it's trading a little bit rich right now for my blood. So for me, I'm not looking to add any right now. But if they continue to crank out quarter after quarter and getting closer and closer to that profitability, I think in regards to where we are 5 years from now, we are going to be very happy shareholders. And guys, I have a huge announcement coming this weekend for my group. And if you want access to 5 free courses, you want to use my stock analyzer tool for free, you want to see all my buy and sell alerts in real time, to include DraftKings and other stocks like that, and you want to be a part of the best 6, 7, and 8-figure Discord out there to get tons of exclusive videos, jump on our live Q&As, talk with me anytime you want, make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.